What's up, audit fans, and welcome to today's video. This is part 2, where I'm going to start looking at tests of control activities over sales and also substantive tests over sales. So if you haven't seen the first part where I go through sales processes, I'll link to that video so you can go back and watch it and then come back and continue on to this one. For everybody else, you ready? Get your pens out. Let's get into it. What's up, audit fans? Dr. Amanda White here, and today we're looking at tests for control activities and substantive tests for the sales process. For those people who are new to my channel, welcome. I teach undergraduate audit at a major Australian university. To all my regular subscribers, hi, and thanks for coming back. Now today we're building on a video about the sales process. If you haven't seen that, I'll link to it so that you can go back and watch it, then come back here. Okay, so if you've already seen part 1 of this video about sales, then you know that in the process of analyzing sales, I talked about a number of different control activities. And I have most of these control activities here, and we're going to design some tests. Now remember, a test of a control is a test whether the control is working or not working. I am not looking for substantive errors, dollar value misstatements here. I'm trying to find out if the control, which is supposed to open or close or do whatever it is, has worked every single time over the entire financial period. Now, of course, I'm going to need to sample. Can't test every single control, or I might be able to with some new data analytics tools, but let's assume we're going to select a sample in all of these tests. So while I might just have the test, please assume here that I am going to be sampling, and your sampling options might be random, haphazard, block, or judgmental. I will talk about which sampling method I might choose in each of these examples as well. So let's get into my slides here. Now you can see in blue I've actually written the control activity, and I'm going to write the test of the internal control underneath in a different color so that you can see it really clearly. Hopefully this orange pen is clear enough. I didn't want to use blue and green just in case there are some people who might be blue-green colorblind. So the first one is that we have barcode scanning to bring up the price from a master price list. This is a really common internal control. You'll see it every time you go to the supermarket self-serve checkout, bip, bip, bip. That's that barcode scanning process. So the idea here is that this way there are no errors in the internal controls, in that people can't just type in the price. So we've got a couple of different options here, but the one I'm going to try is actually a physical test. So you could scan a haphazard sample of items and check the price charged matches the master price list. Now that's great for testing, does the control work right now? But that doesn't really help us to find out whether control was happening over the entire period or not. So you might also select a sample of sales. This is test number 1, test number 2. Select haphazard sample of sales receipts and check the prices charged match the MPL for that date. Now the reason I say for that date is because the prices change over time. Think about your supermarket specials all the time, so make sure that they charge the correct price on that specific date. So that's a good example there for testing that barcode scanning. Now the second test control I have is that only the store manager can approve a price override or a discount. So we've got a couple of different options here. Maybe I'll write this one in red so it's a little bit easier to see. So you could, first test would be to observe a cashier and ask them to attempt to override the price. And it shouldn't work. It just go, I can't do it. The second one would be to select a sample of sales with discounts and check whether a store manager code was entered. Okay, so that would be a really great one there where you could pick a sample over the entire period, look for some discounts, offer sales, and you could probably start doing this using some data analytics tools, even something like Excel. Dump all the sales in, look at the prices of the items, see if you can find any prices that are different, and then see if you can find that store override. That would be the same if you went to Harvey Norman or JB Hi-Fi or Best Buy or The Good Guys, and you said, okay, well, show me all the TV sales that had a 30% discount. Show me the store manager, approve this, sign this. Now, the next one is that the point of sale automatically calculates the total for the transaction. This one is really, really easy. Again, you pick a haphazard sample. So let me do this one in orange. Only one test here. Select a haphazard sample of sales and recalculate the receipt and check it matches the system. Now you might say, hang on Amanda, this looks like a procedure where I'm actually calculating whether a transaction has been recorded accurately, right? Is this the accuracy assertion? And there is where I say yes. This is where it gets tricky with something that we call dual purpose tests. Now a dual purpose test is where I'm testing the control and I'm substantively testing at the same time. And quite often in modern systems where there's electronic point of sale, invoice totaling, barcode scanning, discount calculating with coupons, etc., then when you test the internal control here, you're actually getting substantive evidence at the same time. So it's a super efficient test to use, and that's a really good option to go down. So if you're thinking that sounds like a substantive test, well, that's because it is both dual purpose. It's a dual purpose test. All right, next one. When a journal entry is made, when a payment is made, a journal entry is recorded. So what we need to do there is we can trace or we can vouch. So we can trace a sample of sales, check, journal is dated or date time stamped at the same time as the receipt. So I've started with the receipt and I moved forward to the journal entry and I made sure that those two transactions are recorded at the same time. You could also vouch. So you could start with the journal and match back to see that the sales receipt is date and time stamped at exactly the same time. Now that's assuming that they happen at the same time. With a big supermarket or something like that, they might do batches at the end of the day. So rather than every single sale, they might have a batch of at midday or at the end of the day when they close the store, all of those sales get uploaded. So make sure that you understand the process before you check the time stamps and the date stamps on these. The next one is credit checks on wholesale customers. So there we want to select a sample. Let's write this down. Select a sample of credit sales and confirm customers had funds available on credit when the sale was made. was, terrible spelling and writing here, was made. Okay, so in this one, we want to make sure that when the customer ordered their items, somebody did a credit check, okay? Now that might be, were there funds available? We might also check for the, if there was any signature, or was there some sort of stamp or some sort of notation in the system. All right, so it might be that the order comes online, somebody has to check in the system, yep, they've got credit, tick a box, enter their initials. It could be happening automatically, so the system could be programmed to actually do that check. So you might need to check, double check the programming that at that time, yep, there was actually those funds available, just in case there was a problem with the automated system that might be needed there. Now the next one, any customer who applies for credit must provide financial statements. So there we could easily select a sample of customers and make sure that they had provided that financial information and it had been evaluated. So we'd look for a sample of customers awarded credit, check docs were received, and analysis of credit limit conducted and approved. Right? Normally somebody has to approve credit limits, so we're checking to make sure that there's been that credit limit check. The next one, contents of orders must be checked before being shipped to the customer. Typically we'll see tick, tick, tick on the packing slip. So we could review a sample of pick or pack, depending on whether they call it a pick or a pack doc, for evidence of item checking. All right, and you might notice this if you've received an online delivery, you've had multiple things, and you'll say tick, 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 and then maybe some sort of stamp of approval. We don't need to check that they're the right items at this point. We just need to make sure that those controls were in place. And then the last one, check that when delivery is made to a customer, the journal entry occurs. And again, we could do something similar to the previous one, where we take a sample of journal entries, find the delivery information, check the delivery or the tracking system to make sure that that journal entry is after the date that the goods were actually delivered to the customer and not before, to make sure that they're not trying to overstate sales, perhaps to make themselves look more attractive. So that is all of our processes or examples of how we might test internal controls. Let's get on to the substantive tests here. And I'm not going to write the substantive test because I realize that's probably going to take a long time. But let's look at the assertions here. So we've got occurrence, accuracy, completeness, classification, and cutoff. Now, if I'm ranking these generally, in terms of which assertions I would say were most at risk to least at risk of material misstatements, I'd say we're generally worried about occurrence accuracy as those first two issues, then cutoff, then classification, and then completeness. And that's because businesses are really unlikely to try and understate their revenues. They're usually trying to overstate their revenues. So let's talk about how we might test the occurrence. Now, I will write some notes, but I won't actually write the whole procedure down. It's just going to take too long. But if I'm testing occurrence, I want to vouch. I want to make sure I start at the end of the transaction, the journal entry, match it back to the original supporting documentation, proof of delivery to the customer, shipping documents, invoices, the original customer order. So I want to vouch to prove that the journal entry really is a real transaction. When it comes to accuracy, I'm going to need to probably, when I'm vouching, do a whole lot of recalculating of the total of that sale and also comparing that to master price lists, and proof of the goods that were shipped. Okay. Now, of course, if they just take the good away then and there, that's not such a big deal. But looking at the prices, did we charge them the right price? Did they get sent the right items? So recalculating the line item on the invoice, so quantity times price equals the line item, and then adding all of those prices, those totals up to give you the invoice total. Now, completeness, with completeness, we want to trace. We always want to start at the beginning and work forward. So we're going to do things like select a sample of customer orders and trace those through the order, to the packing document, to the shipping confirmation, to the invoicing, to the journal entries. So starting from the beginning, because you want to make sure if you ordered 50, we sent the customer 50, and that we're charging them for 50 there. That's completeness. So we want to make sure nothing is missing. We also might want to check whether any sales were made, but no goods were actually delivered. Let's make sure that there are no journal entries in that instance. Now with classification is making sure that all the debits and credits are correct. So when it comes to classification, we might do things like, again, this is the tracing of the transaction through to the journal, but we also want to check that it matches the chart of accounts. Okay, the chart of accounts is a big document that has every single account that we debit and credit within the financial statements. So we want to make sure that for this sales transaction, we're debiting and crediting correctly. Now, some of these tests can be done together. So for example, if you're testing occurrence or completeness, at the same time with those transactions, recalculate them for accuracy. With the completeness test, you could actually combine the completeness test and the classification test together when you're doing that tracing. The same when you're doing cutoff. So let me just highlight this in a different color here. When you're doing this vouching up here for occurrence, then what you also do is check the journal is on the correct date. Okay. So that idea of when I'm vouching and I'm starting at the end and I'm going backwards, I can make sure that the journal entry and that shipping date match up so that transactions are in the correct period. So while it might look like a lot, 5 assertions, 5 procedures, it actually isn't, because you are able to double up. Now, in an exam situation for a student, I would always recommend writing 1 procedure per assertion, just because it makes it easier to mark. It's easier for us to award marks to you if we can see that you've laid out every single assertion and you've got 1 procedure. Even if you say, for example, with the completeness one, here's my completeness test, and then for classification, I'm going to use the sample from my completeness test and I'm going to do these additional procedures. That's always the best way of doing it. So that's it. It's really a process of understanding the client, understanding the controls, understanding the business, knowing the assertions to be able to design your tests. So I hope this video was useful. Of course, there's plenty more in this series to come. Today we've looked at sales, but there's going to be videos on cash, accounts receivable, purchasing, long-term liabilities, inventory. So stay tuned, make sure that you're subscribed, of course, and I will see you next time.